Hello, everyone, and welcome to today's NinjaTrader Ecosystem webinar event with Will of Pure Financial Academy. My name is Thomas, and I am a platform representative at NinjaTrader. I would like to mention that it's important to understand that there is substantial risk in trading commodity futures contracts and Forex. You should carefully consider whether such trading is suitable for you, and it will depend on your specific circumstances and financial resources. It is possible to lose all funds deposited with the broker and could even incur losses beyond these amounts. Please inquire at the link provided for more information or for a copy of the CFTC full risk disclosure. Also, please remember that these trading webinars are not a solicitation or recommendation, but simply educational in nature. Now, this webinar is presented by NinjaTrader LLC, which is the technology company responsible for developing and supporting the NinjaTrader trading software. Brokerage-related questions should be directed to the NinjaTrader brokerage team directly at the information provided or by emailing brokerage.sales@ninjatrader.com. Now, the NinjaTrader ecosystem website is home to hundreds of third-party apps and services, all centered around the NinjaTrader platform. With new tools added nearly every day, NinjaTrader ecosystem is home to hundreds of apps and services. You can quickly and easily find the tools or services you're looking for with a simple keyword search. You can also find information about upcoming webinars and an on-demand video archive to view event recordings at the link I'll be posting in the room. Now, for up-to-date information, be sure to like and follow NinjaTrader ecosystem on social media. Now, NinjaTrader is always free for advanced charting, strategy backtesting, and trade simulation to ensure you are on the latest version of NinjaTrader. And to pick up a free live data trial, please visit the following link I'll be posting in the room. Now, you could purchase or lease the NinjaTrader platform at the link I'll be posting in the room. And if you are just getting started with NinjaTrader, we offer free live trading on a daily basis. You could view a schedule of those weekly events at the following link. Now, we are very excited for this unique event in which Will demonstrate the PFAZoneSuite's live order handling features and how they can substantially reduce your workload, allowing you to focus on important trade decisions. Now, thank you for your attendance today, and without further ado, it's my pleasure to welcome to the NinjaTrader webinar room, Will. Please take it away, Will.
All right, thank you. Most appreciated for the excellent information, the kind introduction. As always, it is such a privilege to be here in the NinjaTrader ecosystem. We certainly go back a long way, I can tell you that. And each and every time, it's always such a pleasure working with you all. So thank you again. Also, thank you to all the participants. You've taken time out of your day to be here, and I hope that we can add substantial value in some way. I will apologize in advance if my energy seems a little bit low, or my voice, I may have to pause for a moment. Not to worry, everything is perfectly fine, but I just want to throw that out there in advance. So I appreciate you guys being patient with me through the presentation here. Okay, so let's go ahead, number one, and how's about we get something on the screen for you guys to see other than just listening to the sound of my my horrible voice. I'm sorry for that again. All right, so let's see if I can get it here. We want screen, there we go. All right, perfect. So I'm going to get everything up here, make sure I have all the information. Excellent. Okay, so the way that I usually like to do these, and I'm sure that some of you have actually been in our presentations before, I typically like to get as much done in as short amount of time as possible, and therefore a lot of times I'll ask that you hold your questions towards the end of the presentation. I will do absolutely everything in my power to get to those before the end of the session. As we're limited on time, I'm sure you all understand how that goes, and I will certainly do my best to respect your time and your questions, not to worry. However, in the event that they're missed, we will offer a follow-up session. I will provide that link to you all. So as a matter of fact, I tell you what, let me go ahead and do that right now. So what I want to do is get you the link. There you go. So I'm going to go ahead and provide that to you. And what that's going to allow you to do is just go ahead and get ready. If you haven't already, you get registered. We're going to do a follow-up event where we will literally spend as much time as possible when we're in our platform. We don't limit our time. And that way every single question gets answered with sufficiency. Okay, all right, very good. So you all should see the disclaimer up there. I would tell you that, as always, they've done such an excellent job. They, of course, have already gone through the disclaimer. I'll read just the first little bit there. Trading does, of course, contain substantial risk, not for every investor. I would say probably the most important part of any disclaimer, that we're going to go through is this part right here. An investor could potentially lose all or more than their initial investment. And you know what's ironic today? Because we just had, and as you guys probably know, if you've been watching CNBC, you've heard a lot about it. You have I won't name names, you understand, but we have a lot of things going on in the media. You got things that have just happened with individual equities. Okay, they talk about manipulation, this and that, and so on. But the reason I bring this up, and the reason I'm bringing this to your attention, is because it had to do a lot with with short selling and manipulation, things like that. Well, if you're caught on the wrong side of that, it is very, very, very bad. Okay, so when you're dealing with leverage, especially in the futures, markets and things to that extent, a lot of leverage involved. So if you put, let's say, 5,000 into the market, it is literally possible that you could end up not only losing your 5,000, but actually owing your broker another 1,000, 2,000, whatever it is. I mean, I'm just using complete hypothetical numbers, but I just always like to make people aware of that, because especially when we get started at this, sometimes people don't mention those risks. And so anyway, most important thing in my opinion, but don't want to scare you there. Futures trading, any other trading, we shouldn't be scared of it at all. We should encourage, certain types of behavior, because it's really doing us a favor, right? And I'll explain that as we get out to the charts momentarily. And it will make sense. I'll actually show you the trade that we executed overnight and things, or attempted to, excuse me. Did not get our fill, but we have, I'll be happy to share all that with you when we get out to the live charts, okay? So a little bit about us. PFA, acronym Pure Financial Academy. We're an online trading community. We're dedicated to supply and demand trading in general, okay? So we provided training materials and software to individuals seeking to learn about trading since about 2009. Been doing this for a long time. Love it. Love working with all of you individuals, I can tell you that. So we believe in the firm power of having others on the same path as yourself. That offers up support, of course. So anytime you're doing something by yourself, it's always good to have a teammate, right? So our mission in general is to provide a positive and effective environment for traders and investors around the world who wish to utilize supply and demand trading methods. We've done a lot in the industry as far as the initial, I should say, pioneering the development of supply and demand software in general. Now, that's not supply and demand trading, to be very clear. I don't, definitely, that's been around for far longer than we have, right? But in general, software applicable to supply and demand zones, order flow profile, things to that extent, which is a tool that we're going to be looking at. But a lot of just really great people, companies, software, a lot of great stuff out there today. So hopefully we can meet the top of your list. So we've looked at a little bit of the presentation overview, PFA as the intro. Specifically, the Zone Suite is what we're going to be looking at today, and how it can help your trading be most efficient, right? Especially in times like this. And I really do just think this is ironic with the timing as far as everything that's going on, the amount of volatility that's happened in the past day or two, right? It's been exponential. So always a good time to jump in and see if someone on the other end of the mic may be able to offer up something of that might be advantageous in any way, okay? All right, so we're going to keep going here, and the PFAZoneSuite is indeed fully compatible with NinjaTrader 8, as we are always happy to announce. It is designed to reduce subjectivity in determining future turning points on a price chart. It utilizes price recognition, volume distribution, and market volatility in its calculations, and there you go. Yet again, mentioning the volatility. Good thing we're here today, because there is a lot of it. Then it takes and displays it on the price chart with custom graphics. They can be used for enhanced confluence purposes and for keeping track of historical data, which thereby becomes fully back testable. And this is always important because we want to understand and be able to test every theory that we think we may have. All right, so first and foremost, we're going to look at one of the, again, there are a plethora, don't have time to go through all of them, but I really want to focus on one because today's all about efficiency. So we're going to first look at our order management data point. Specifically in this particular slide, we're looking at supply. If you guys are not familiar with supply and demand, I know probably every one of you are. Think of it, supply is always going to be above current price, rather like resistance is. Support and or demand are always below. So if we're referencing a supply zone, supply level, or anything to do with supply, it would be above, excuse me. And if we're referencing demand, anything to do with demand, that would be below. So in this case, we see a red zone here. Now, let me just get my pointer here. I always forget to do this. Arrow options make it visible for you there. So as you can see, that current price in this image here is right at this current red candle. So we're referencing this red zone because it's above. Anything below current price, this zone down here, for example, would be considered demand. Okay, so we're just going to talk about the supply stop. If you notice these labels on the right side of the chart here, we have a red followed by a green, gray, and then 3 green labels. So those labels are the ones I want to bring your attention to. That's going to be our supply stop, our entry, trigger line, and 3 targets. We don't have to have 3 targets, but we can, right? So we can have up to 3 targets. The trigger line is worth mentioning because the trigger line is rather an automated point in which we want to protect our investment. So for all intents and purposes, where the stop resides currently, at which point we want to move that stop to what we would industry standard can be considered break-even plus commissions. So at what point do we want to do that, right? We can manually manipulate that trigger line to put it anywhere on the chart that we want, and when it is touched, as the nomenclature suggests, it is a trigger point. So thereby it will move the stop to break-even plus commissions. Okay, again, all about efficiency. And these orders are being submitted on the corresponding market. You're probably thinking to yourself, well, yeah, we would hope so, right? So that might not make a whole lot of sense right now, but it will in just a moment. So these orders, okay, anytime we utilize them, if I'm on, say, the S&P, it's going to submit the order onto the S&P. If I'm on Apple, it's going to submit it on Apple, and so on and so forth. Okay. Now, the next thing I want to look at is the order management, or the hedge rather, order management data points. Okay, so the reason that I mentioned previously that those orders are on the corresponding market, that would be because these markets, these orders are not, right? So these orders are actually going to be submitted on another market of our choosing. So we can literally be on the same market here. I'm going to throw in a hypothetical. I could be on the S&P, or rather I could be, let's throw that inverse. I could be on Apple equity, right? I could be trading Apple's, equities, whatever, 10 shares, 100 shares, whatever it is, however many I want and desire. I can use those order labels to manipulate my trigger line, target, stop, and entry, and so on and so forth. And then I could literally, all from Apple, directly from that chart, never going anywhere else, I could submit a hedge order to the S&P, okay, or to any other desired market as well. And again, that's all from the same chart. I don't have to go anywhere else, right? So it's excellent, efficiency, as I've mentioned a few times. That's really what we're all about today. Okay, so I do want to go back just a little bit and just kind of notate here that you see the hedge entry stop as well as target 1, but I do want to notate that the same as the standard corresponding market positions or order labels, if you will, there are also up to 3 targets here as well. I just didn't put them on the slide because I figured I could mention that and make things a little bit smoother here. Okay, and in addition to that, we can also submit a hedge order with no bracket order at all. So why would you do that? Well, for many reasons. I actually do it quite frequently. And the reason I do that is because if I'm in a position, say Apple or a plethora of equities, or for that matter, whatever else, and I want to hedge against it, I don't want to be taken out of my hedge position by mistake, right? So thereby I will submit it without a bracket order, so it just fluctuates and I never have to worry about getting taken out of that position. Okay? And then we're going to finally talk about push button order submission. So by being, efficient, we need our time restraints to be reduced, right? I mean, we really need that efficiency. So what we try to do is everything right there in front of us. We don't want to have to go other places, make changes, do calculations, so on and so forth, because what is that doing? Well, it's diminishing my time. And, time is, as the saying goes, not in a literal sense, but time is money. It's valuable. So we need to have as much of that as possible, because the important thing is not calculating something such as how much risk is involved at this tick and this tick and this tick. The more important part is, do I even want to be trading at all, right? Do I want to be buying here or selling here, and so on. So we need to be able to allocate our time efficiently to what's really important, not the calculations that these brilliant computers can do for us in microseconds. So that's what we've done. We allow the computer to do the work for us so that we don't have to waste our time doing such. So when I've made my determination, I've moved my labels wherever I deem them necessary. I literally, it's a push of a button. So I go here, click submit orders, and then everything is thereby submitted for me. I can also increase, decrease the amount of contracts via the plus and or negative icon there. Okay, and I'm just going to move a little bit faster so I can do this from the live chart. As I mentioned previously, we do have that free event coming up, so just take a look. If you weren't here just a little bit ago at the beginning of the session, you'll notice that I did paste a link in there, purefinancialacademy.com/free-online trading education. There you go. So just copy and paste that. You can go ahead and get registered. Of course, free, no charge, no none of that. We just want to be able to educate, and then if you're interested in our tools, of course, we'd love to have you on board on the PFA team. Okay, so we will come back to this. I have a couple of excellent opportunities for you all today. So again, we'll come back to that, and that can be the latter part of today's presentation. Let's spend some time on the charts. Okay. All right, so here's what we're going to do. We're going to look at this in real time, all right? And every single day in our live session, this is always what we're doing, right? We're always going through and we're looking at things in advance. You cannot do things hindsight. I mean, if we could, that would really be nice, right? That would be super duper nice. But unfortunately, we can't do that, hypothetically or otherwise. We cannot make money from hindsight. So we always want to be in advance of the financial markets. And what I always say is that the markets are based off of anticipation, right? So they're always going to be one step ahead of what I just generally refer to as the mass public. And it gets a little bit tricky because as traders, right, we all have to be ahead of the markets. And so, we at all time are trying to be 2 steps ahead of the mass public. So it's, again, a little bit cumbersome, but we can simplify that to the best of our ability using forward-thinking analysis. All right, so if I go out to any market, as I said before, I will share this with you. This is our PFAZoneSuite. Here you can see on the chart, and this is actually the strategic version of it, meaning the automated strategy version. So we'll go ahead, and it doesn't really matter. It's all going to have the same tools built into it. But I'll work off of the other chart here so it doesn't mess with our actual orders or anything like that. We can, of course, look at the accuracy, which is quite interesting. And noting what we've done today, it's ironic because when you come in and you think of, the market's moving as much, 500-600 points on the Dow in a single day, up and down, that's a lot, right? I mean, in a general sense, that's a pretty good bit. So I'm going to go over here to the micro S&P, and the reason I'm doing that is, again, I'll just flip to this tab. I'm just doing that because I don't really want to make any changes here that could impact the strategy, okay? But I will tell you, and we'll go ahead and look at this. When I refer to these things, just so you know, I do always look at things in a hypothetical sense because I'm not a registered CTA or broker or anything otherwise. So I'm prohibited from making any recommendations or solicitations of any kind, right? So everything, as the disclaimer stated, is for educational purposes, and the orders that we're looking at here are for hypothetical purposes, all right? So we want to talk about that far in advance because the whole thing, in my opinion, is really getting ahead of it. Seeing is believing, and that's what I always tell people. Look, I don't want you to believe me. I want you to really just begin to see this, learn how the markets function, and become a believer through that process. All right. So in order to do that, the way that we accommodate that is by always doing things in advance. We do not predict. I am not in any way, and I mean this no sarcasm whatsoever, but I don't have a psychic ability of any regards. Whether you believe in that or not is really irrelevant. I certainly do not have that ability. I do wish I did. So when we talk about these things in the future, we're not predicting them. We're predetermining them based on pattern recognition and order flow analysis. So it's a very simple process, and sometimes it can absolutely seem, like predictions, but I can assure you it is not, and that would be very nice. So that being said, I'll go ahead and point to this order. So we have an order submitted there at 36.92 quarter, which is very unfortunate for us that it didn't get filled, because this order was actually submitted in the overnight after we finally got a pause down here. So the order gets submitted here, and we almost got filled, okay? We almost got filled, and as you can see here, it not only rallied away from our zone there, it rallied all the way back up, and I just want to go over here because, again, I don't want to make any changes or alterations there. So let's look at what's actually happened. All right, the micro version is going to be, effectively the same as the E-mini version. So price drops down, touches our zone, and then overnight our order gets submitted into the zone itself. Now the reason our order was submitted in the zone and not on the zone, on the exterior, is based on risk tolerance. We didn't want to risk that much based on our definitive trade plan, and therefore we reduced it ever so slightly. So it kind of is what it is. We just have to suffer through that. But, noting the accuracy of the zones in themselves, however, from today's trading alone, if you'll notice what has occurred is we've come down and we hit our zone here, and we've literally rallied all the way up, and we've touched our supply zone just above the 38.21 quarter. So, accuracy is a great thing, but it does have to line up with our individual trade plan, right? Because just because something's accurate, it doesn't make it necessarily sufficient for each and every person. For example, some people may be working with six-figure accounts. Some people may be working with hundreds of dollars in their account. It's just very different. So what one person can do doesn't necessarily mean that the other is going to be able to do. Okay. That being said, always good to know that the software is of grave accuracy. So if I wanted to take a position, let's go to the smaller time frame, because what I want to do is actually start to work through that efficiency. All right, so we're going to go here, and I'll run you through a little bit of what we do and how we do it. Okay, so when we're looking to analyze the market, we're always utilizing multiple time frame functionality. Just as a very quick note here, again, I don't have time to run through all the bells and whistles, but just as a quick note here, we can actually run simultaneous multiple time frame zones on a singular chart. So not only can I submit orders to multiple markets, I can also accommodate multiple time frames of the corresponding market. So in this case here, we're looking at the micro S&P, and these are daily zones. But what if I wanted to see internal zones of a smaller time frame? So let's say 60-minute zones. I can populate those on this same chart as well. Currently, I just have them disabled. If I had them enabled, there'd be a second rectangle there. But I can also populate them here on this chart as well. Not only can I do that, but I can display internal zones only. So for all intents and purposes, if I'm utilizing the larger time frame and I'm saying this is the location that I want to be the seller and or buyer, dependent upon all of our other analysis, direction, altitude, opposing levels, so on and so forth, I can populate the levels only at that location. So I could remove a ton of unnecessary analysis and or filtering that I have to do. So with the title of today, really focusing on efficiency, every time I have to make a decision, it's more stress, right? Whether that is going to be, do I want to buy today? Do I want to sell today? Both or neither? Okay, well, now that I've made that determination, let's say that I want to buy. Well, where do I want to buy? Okay, well, I've determined where I want to buy. Well, how much can I risk to do that, right? I mean, there's so many decisions that we have to go through in a single trade. It can be very, cumbersome. So again, just these little bells and whistles try to remove as much of that as possible so that we can remove subjectivity, just unnecessary emotions in general. Okay, so we don't want to remove them. I shouldn't say that. We want to control them. So we always want our emotions. We just want to be in control of them. So over here, what I'm going to do is I'm going to say, okay, first and foremost, I want to understand the context of this market on the larger picture. What's the big boys and girls doing, right? So what, smart money, if you will, institutions, hedge funds, pension, you get the large money. What are they thinking? Are they thinking to buy? Are they thinking to sell? And how do we determine that information? So it really goes into, as I was mentioning a few of our components a moment ago, very basic stuff, ironically, is what helps us the most. So what is the direction of the market? Now, of course, in order to determine the direction, you have to know how to analyze that with objectivity, not subjectivity, but being very objective. So we'll go through in our own platform when we go through the follow-up event, you'll see that we have all of that automated as well. But suffice to say, we want to be aware of what the current direction is, what's there to stop us, and how long have we been going in this direction, right? Because the longer we go in a current direction, the lower the probability actually becomes of our desired outcome, okay? So we can see here, let's just throw some, we'll pretend here for a moment, if you will. Or rather, we could go through and pretend that we actually were here last night for some odd reason and we got our fill, okay? And then I think what's even better served is to actually just go ahead and pretend that we wanted to be the buyer here. And I'm not by any account saying that we would. I'm simply trying to say that I want to show you how the software can help with that. If you want to learn about our analysis and how we determine which trades we get into and out of, it's very simple. We do discuss, even in our free sessions, we do discuss this well in advance. So, I would just say probably get in there and you can ask some of the others who have been there for a while. But yeah, no, it's very objective, all right here, all kept very simple. Okay, so again, I'm not in any way saying that we're going to go over here and do something that we're, would actually do, but you do need to see it, okay, and how it works. So if we go over here, let's say that for all intents and purposes, we've deemed that the market is in an uptrend and we're eager to buy, okay? Just wipe all the volatility and those unnecessary emotions out, and we've said, yeah, we want to be the buyer in this market. Okay, so how are we going to do that? Well, I'm going to go and I'm going to find my reason to buy, okay? So back here is what I was referencing overnight, but I think it's actually better if we use what has not happened yet, okay? So if we go down here, I'm just going to open this up. And you can notice here that we have a bright green zone. Now, as I mentioned when we came into the session, anything below is going to be demand. Anything above is going to be supply. So this green level down here is known as a demand zone or demand level. And we're looking at that at 37.54 to 37.30 quarter to be exact, okay? All right, so if we come down into this area, for all intents and purposes, again, if I wanted to be the buyer, I need to be able to be the buyer and I need to be able to make those decisions very, very, very fast. So I already know in my mind, in my trade plan, I know what my maximum risk is, but how do I meet that risk, right? So let's say, let's populate our orders here. Let's say that I have $1,000 risk tolerance. Okay, for whatever reason, again, we have our own rule of thumb, so to speak, and what our risk tolerance can and perhaps should be. But let's say for whatever reason it's $1,000. Okay, so I can see here that my current risk, where it says RR, this is our risk and reward. So if it is in parentheses, that is going to be risk. Okay, because that would be a negative value. But if it's not in parentheses, that means it's a positive value and or a profit target destination, right? So positive value versus negative. So I can see here my risk is $240 for the entirety of this zone. So I don't need to think about that. I don't need to go grab a calculator or anything to that extent to figure that out. It's just done for me. But I already said that I have $1,000 risk tolerance. So, well, I know I'm not even a quarter of the way there yet, okay? And more importantly, maybe I want to do something like this. Maybe I want to even reduce that a little bit more. Okay, so I can find and populate exactly where I want that to be, and I can do that using additional tools that we have, such as our order flow analysis. So in this case, to be honest with you, right there at the top, but also if I bring this in right around that 37.44 mark, I can get really specific about this stuff, right? So I won't talk too much about that today, as we will in the follow-up session. So now let's say I've dictated that my entry is going to be at 37.44. I have a risk of 56 ticks, which is equivalent of $140 based upon the number of contracts I am trading on the corresponding market, which in this case is the micro S&P futures. I'm not happy with that, right? So I want to fulfill the majority at least of my risk tolerance. So what I can do is use my user interface and literally left click that plus symbol. What you're going to notice is that the numbers here, okay, are going to change. So I'm adding one to them. So 3 becomes 4 and so on. And what I'm really doing is watching my risk over here to see, okay, well, how many contracts can I actually trade while maintaining my risk? Okay, so I'm up to $980 at 14 So now by going to 15 contracts, I've surpassed my actual risk tolerance, which is unacceptable, okay, based on my trade plan, of course. So I'm going to reduce that back down, and now I'm at risk for $980 based upon 14 contracts on the micro S&P. And when I'm happy with that, I can literally click the button and now I'm done, okay? But I'm not happy with it yet, right? Because whereas I have determined my risk, I have my stop and entry perhaps in place, what I've not done is moved my target trigger line. I really haven't fulfilled my trade in itself, right? So I can go and then I can pull this up, right? Move it anywhere I want on the price chart. And I can clearly see where the sellers have taken place. I can see a big red zone up here. And what I don't want to do is fight against them. So I could move my trigger line value, okay, at or before the supply. And now what I'm doing is saying, okay, remember we talked about this previously, that trigger line is simply a point in time or a value, if you will, to which the stop is going to automatically move to break even plus commissions. Okay. So again, I apologize with my energy. Just please bear with me. Typically, I have a pretty good bit of a little slow to go today, so I appreciate your understanding. So right now, I've fulfilled, and granted, I've talked through this, which sometimes takes forever with me, and I apologize. But with all of that joking aside, I've determined my risk tolerance. I've moved my trigger line, my targets, and so on. And I've done that, which I could have done, what would you say, probably within a matter of 5 seconds, 10 seconds, something like that. Now that's not my analysis. Of course, I had to determine where I want to put the entry and all of that. But once I've determined it, I can literally do this within about, maybe 5 to 10 seconds. Okay. And when I'm happy with the entirety of that trade in itself, all I have to do is go left click, and now everything is done for me. So I can literally walk away from my screen, and I'm very, happy about that. Of course, we always want to be aware of the risks involved with, such as internet connectivity, things like that. So I'd be happy to have a conversation with you about that. But that's just typical risks in trading: internet connectivity, power outages, things to that extent. Server side orders versus local orders. Okay. But anyway, everything is done right here for us. And if I go into that, like you see the order right here. So we want to watch at 37.44. Here's what's ironic today. All right. And I'm just going to feed you a little bit of information of what we actually discussed in our room, as opposed to, randomly discussing things. In the room this morning, we talked on the S&P, as we always do. That is my go-to market, just in case any of you were wondering. On the S&P, however, mind you, let me go back actually a little bit further. So yesterday during the day, we talked about, price dropping and so on. If it dropped and took out a previous level, would we react to that? And the answer is no, because what we wanted to see was that, we wanted to factually see that price was not crashing. Okay, by crashing, erratic drops and so on. By all accounts, it not only did it touch our level and turn back up, it actually paused and closed out the day, and therefore we then submitted our entry down into the demand zone. It came down, made a lower low, but as I said, it just missed our entry ever so slightly. All right, so today when we come into the room, Actually, as a matter of fact, the title, the title of today was Remain Calm, okay? Because yesterday we went through an erratic drop, but yet we remained bullish. So what we said the day before, or yesterday, if you will, was that we absolutely are bullish this market, okay? And if it drops to such and such level, which was, of course, we had a level here and then this level that we're in, you can see the order there as it is. But we remain bullish in this market, and what it's doing is actually it's providing us an opportunity. It's a favor, if you will, from the market. So we thoroughly appreciate that. And we can use other examples as well, such as the one that you're seeing back here. If you notice, we actually got the fill here on a very large down day. So when a lot of people are having rather negative emotions, we're trying to not necessarily have a positive emotion, but not react to that in a negative way, right? In other words, we look at it, and instead of paying attention to the news or anything other that's really, bringing attention to that, we're focused on the price chart. We're dictating value, and then we execute at that corresponding value. At the end of the day, that's literally the best that we can do, right? And I think it's pretty good. So that being said, we have about 7 to 8 minutes left, and I want to get through some questions just in case you guys have them. I know that you may have them. If it pertains to anything we've discussed right here, let's go ahead and get those out of the way, things we can do. I did mention, let's see here, several things actually I've mentioned, but let's say that I want to go down here and I want to, this is not something that we previously discussed, but I did mention the ability to put on multiple profit targets. So let's say though that I want to do something kind of unique maybe to your own trading style or philosophy. So I want to maybe dollar cost average into the market. So what I can do is go down to a lower level, whichever one that may be. Of course, it would not be subjective, it would be objective. We would be entering there for a very definitive reason. But if I wanted to do that, I could go down to that, and instead of clicking the CT, I could click the TF, okay? So CT is acronym for counter trend, and TF trend following. So I can go down, and I can do this at multiple levels if desired, okay? And the same thing, the reason I'm doing this is because I wanted to show you the difference in CT. I have these in my settings set, if it's counter trend, to only have one target. Conversely, if it's trend following, I prefer to have multiple targets based on the settings that you're seeing there, right? So I can simply toggle that on or off. And remember, I can go make alterations directly from that, noting that it is keeping my calculations for me, okay? Meaning that my trigger line is set at a 1-to-1, target 1, 2-to-1, 3-to-1, and 4-to-1, okay? So as long as I keep, the entry and the stop, okay, it will remain during those calculations, right? So we'll continue to calculate based upon those. Now, if I make one little thing different, that is the trigger line or any of the targets, watch what happens. Now the lines over here became dashed, right? Now watch what happens. See how they're no longer making those calculations? Well, maybe I don't like that. So then it's a simple click of the mouse and it's doing the work for me again, okay? So, again, bells and whistles and all that, but we're happy to cover those in our platform. We do want you to see the benefit of how quickly we can actually accommodate things though. All right, so let's try to go through a few questions and I'll see if I can get those answered for you, okay? And I'll be happy to do anything that I can within the next 5 minutes. No, I have no association or affiliation or whatever with any other company. Currently, Jack, get in touch with us. We don't necessarily have payment plans. No, we do offer a couple of different options for you to get into it though. That way you don't have to put everything up front, because we respect that. Either you don't have the money or you don't want to put all the money. We get that. We respect it. So we do have a couple of different options for you. If you want to give us a shout through the website or directly at, let me get this for you. Feel free to shoot an email directly to support@purefinancialacademy.com, and we'll take care of you one way or the other. Absolutely. John, are these zones based on volume or price? Well, I mean, I'm not going to, of course, I won't dive into the algorithms or anything like that. Suffice to say they're a collaboration though, John. They're not one thing. They are multiple items, right? Yeah, so it's not just one thing that the zones are derived from. It is a multiplicity. So TPO or volume profile is a better, same question. Yeah, still the same. Absolutely. I appreciate you being, offering that clarity there. Thank you so much. But yeah, that is of course part of it, but definitely not derived in full from that. The yellow vertical lines, absolutely. So these are our entry markers. Basically what they're doing is throwing a yellow stripe on there, the bar before the entry actually got executed or filled, if you will, right? So you had an entry here, like if we go back, you can see all the entries that have occurred, things like that. Yeah, so that's what that's doing. It's just going back and marking. It makes it's visual, for us. Like I said, it's ironic how many times I've said it during this presentation. I don't mean to be so redundant. And oftentimes when you say it out loud, it's like, wow, I didn't realize, but we are very focused on efficiency, not just with, the obvious, right, with trade performance, that goes without saying. But, efficiency is key to me, whether it's, load times, everything to do with the algorithms, visual aspects, anything that can make our life easier is what we're kind of going for. And I apologize for this in advance. I am not trying to make a comparison. I'm simply saying any solid company, like for example, Apple or Tesla or name a company out there. Again, no comparison to us whatsoever. But you can see where their product is based on efficiently. I mean, I'm sure many of you have the iPhone. How efficient is that thing, right? Like I'm not kidding. I can do 5 million things on that phone, and it's kind of crazy how quickly we can do it. So I think we pay attention to the efficiency to the best of our ability. Yeah, and so we aspire to be better, I guess, right? Being recorded, Emmanuel, I'm gonna let NinjaTrader guys and gals over there handle that question. What's the smallest time frame you trade? Very good question, Sally. I like that one. So look, here's the thing. Okay, when we are training people, when we're educating, right? We teach people A to Z. So there's the whole 9 yards. Not only a strategy, because that's a minute part of it. It's just a very small part. It's understanding how and why we arrive at the information we do. So I'm telling you this because the answer to your question is I will tell you my time frame, but the way that we train people, you can effectively do it across any time frame. Okay, but yeah, no, my time frame, the smallest I'll go is the 60. I will tell you, preferably, I never have to leave the daily though, right? So I don't have to go smaller than the daily. Some of you are thinking, ooh, that's, but look, just be a little bit open-minded to it. Come into our session, talk to the others, right? Let the people who have seen us do this for years and years and years, just be a little bit open-minded to it and see if it might be of benefit. But again, don't take it from me. I think it's more advantageous for you to come in and kind of hear, chat with the others and things like that. I never want to turn away a very short-term trader, but what I would say is if you're successful, then, look, here's our software. That's great. I think we can maybe make your trading more efficient. But if it's not broken, don't fix it, right? Conversely, maybe if you're not doing so well, it's a good idea to remain open-minded anyway. And in my opinion, we can show a very good and effective way. And I always like to throw that in there because I know the daily chart seems like a large time frame to some of you, but a lot of times less is more, and that's our philosophy, if you will. No, yeah, so VWAP, we don't include that in there. It's not an indicator that we use. Algorithms, we'll put underlying algorithms, but that's not an indicator or anything. What's the name of your indicator? Is it available at NinjaTrader default indicators list? Yeah, absolutely, SB. So, well, no, not in the default because you have to purchase it from us, right? So it is in the NinjaTrader indicator list, and it's called the PFAZoneSuite. Well, I have two of them right there. But so you can see the PFAZoneSuite is the name of it right there. And again, if you contact us and you actually get the software, then yes, of course, you would see it in the NinjaTrader default list. All right, excellent. Yeah, so no, we're good. Hey, excellent timing. I think I've done okay on it. I'm going to go ahead and wrap it up right now, guys and gals. I thoroughly appreciate your time, both on the NinjaTrader ecosystem side as well as all of your time. Again, make sure you get registered for the free session, and we'll answer any questions that you all have. Contact us at any time. God bless you all, and happy trading. Take care. Bye for now.
All right. Well, I would like to give a special thank you to Will of Pure Financial Academy for a great presentation today. Everyone in attendance here today will receive an on-demand recording of today's event, so please keep an eye out for that email. Now, NinjaTrader Ecosystem is pleased to sponsor these weekly vendor events as a value-added service for our clients. If you find value in these events, we hope you will attend them on a regular basis. We would like to remind you that the information provided in this event today was that of Pure Financial Academy and not of NinjaTrader. All information was for educational purposes and should not be construed as trading advice. Again, we appreciate the time you spent with us today. Enjoy the rest of your day, and we hope to see you in future webinars. Happy trading from all of us here at NinjaTrader Ecosystem.